Well, welcome again. It's the second day of the African Investment Forum here in South Africa in Johannesburg. Very interesting conversations we had from yesterday. What was your key takeaway from you?
Thanks, Ken. I think the most interesting thing for me was definitely how excited Africans are to invest in Africa. And I think that was really positive. You know, there's a lot of momentum building and there are a lot of interesting infrastructure projects that seem to be underway. So hopefully they'll get the funding and the finance to see them through.
We saw quite a number of signings yesterday. One very interesting one with the government of Ghana, and also we had the Africa 50. A project that started last year. We saw the governments come together to kind of consolidate on the plans from last year. Very interesting because we're seeing that it's not just one talk show from last year, but we're seeing slow progress coming from there. Because these projects usually take some time.
Absolutely, and like our other colleague Karabo said yesterday, it's like speed dating for deals, right? So there are a lot of people who are genuinely interested in making deals and signing on contracts.
Through the deal tracker, we're working with the African Development Bank, DBSA and other banks to get those deals to closure. And what closure means basically is to get the right partner. As you were saying earlier, everybody is trying to flirt with you on this or that, but the good thing about this is that it's positive. Everybody's coming in, and I think soon we will be closing all those deals. The good thing as well is that this year we've got new projects. And thanks to the investment on project preparation and project origination. That has been the problem in the continent, that people have got ideas, but we don't have the necessary capacity and technical capacity to get a project to bankability. So we also excited that through the Africa Investment Forum, we are now in a position to really take deals to bankability and attract investors.
I'd like to understand the kind of feedback you're getting from the boardroom engagement that have been taking place so far.
Well, quite frankly, the initial meetings have been very encouraging. So for the one that we had yesterday, that's the integrated lubrication plant, we did have one of the top 5 large banks in South Africa indicate interest already. And we also received interest from one of the Japanese agencies. So the response so far has been encouraging.
Perhaps you could talk a bit about risks, and we don't have to go through all of them, but the process and the big risks and the sort of the no deal risk, deal breaker risks.
The shift under Prosper Africa, started up under Power Africa, is to work with local developers, local institutions to help get identified deals and bring those deals to bankability. I can say under the Trade and Investment Hub platforms in the last 3 years, using when available local investors and local business developers, they've got a pipeline now and have executed deals about $400 million in SMEs working across borders looking to export.
I think what you need in Africa, you need really that patient investors, longer term investors, because the cycle to bring a project from origination to financial close is quite long. And then during operations, you can go through roadblocks in terms of your return, in terms of the way it's going to deliver outcome.
Okay.
So patient risk, patient capital is really what we need.
10 years ago, there were very few private equity companies in Africa. That's changed. But the key issue really now that we're finding with a lot of, and I think it's very useful for people to know this, is what we have, what I call the ground up, the project and the development capital, the most risky part of the capital. So I just wondered whether Shankar and Ms. Wade-Smith could provide some pointers, given CDC or some of the other DFIs in this area.
The governments are extremely aware of this issue and are providing the facilities for this. That's what I heard.
Yeah.
But the other area, Delhi, I would add is also I think Africa needs some venture capital funds, because the other side of it is there's a digital Africa and you need VC funds.
Tell us a bit about the objectives, the overall objectives of the bank's strategy in North Africa and the Mediterranean.
Thank you very much. It's a great pleasure to be here in Johannesburg today. The European Bank for Reconstruction and Development entered North Africa fairly recently in 2012. And our objective really has been to develop the private sector and market economies in those countries. And as a result, we've invested more than $11 billion already in the last 7 years.
Tell us about the type of investments that happen in North Africa.
It's actually quite exciting because we're really seeing a strong development of the private sector. So we're working across literally all sectors of the economy. But probably one of the most interesting is in the renewables sector.
How frank and how sincere have they been, and what's the feedback you're getting from investors?
Well, they've been very frank. I mean, ranging from the enabling environment itself, the foreign exchange situation, because these are likely to be foreign exchange deals rather than naira denominated deals, and that has implications, especially when you don't have a stable or you have a multiple foreign exchange rate. So hedging that against future changes in the foreign exchange situation is one of the critical discussions that we're having on those deals, as well as on other deals that are taking place.
But what's important to pay attention to is that where are the institutional investors investing? Only 1 to 2% of all the global assets under management actually goes to infrastructure globally. And of that, less than 1% of that actually goes to Africa, where the infrastructure deficit is actually the highest. And so some of the reasons that people give for that is risk, political risk, financial risk, market risk, all kind of risk. But Africa is more than risk. Africa is all about opportunities as well. And all, for example, as I said yesterday, if you look at Moody's own report in terms of default on loans, you actually find that Africa has the least, one of the lowest in terms of default on loans from 2000, I think it's 2003, even up till now.
And again, you know, we want to come out with something at the end of this. So we're going to be looking to create some form of consensus, as President Adesina set out, about the role, the nature, and the characteristics of the multilateral development banks, development finance institutions, regional banks, and development partners more generally, who are, just like us, very keen to see the continent advance in its development at a rapid pace.
The reason why Africa has struggled is because market infrastructure is deficient in some places, and therefore trust does not exist. So we have to work on building trust. We have to work on fixing the market infrastructure. One of the things we've done is, and we talked about this earlier, is the creation of InfraCredit. InfraCredit for us is a very interesting landmark investment for the NSI, which we sponsored along with Garanco. And recently, the AFDB invested in InfraCredit. What does it do? It actually allows pension funds to invest domestically. It also creates a platform for us to reduce the cost of capital in the country. We've invested in 6 other institutions that actually address market infrastructure. The way I view the continent is very simple. I think this is a buying opportunity for 2 reasons. Market infrastructure opportunities are being built. The second thing is we're also working on mobilizing domestic capital in the country, which at the moment is significant but not yet efficiently used. And I think this is what makes it really phenomenal with these market infrastructure opportunities.
Infrastructure is actually a really good investment for pension funds in terms of the nature of the long term of the investments, as well as the principal repayments that often come with it. So it's a natural hedge against inflation that I think more and more pension funds will be adopting as the awareness grows about the opportunities and as the structures become more available through which to invest.
The data that we've historically been putting into the market, we put out some great reports. We spend millions, tens of millions of dollars each year on reports. But when you analyze them, I'm not sure how many of them actually talk about the investment return, the risk-reward profiles. And if we're looking to talk to a financial sector, a sophisticated institutional investor, perhaps we might start looking at different content. And that's definitely an area that I know that there's a lot of budget within our own institutions as well as development partners.
And it's clear that from growing from billions to trillions, you don't go to where the billions are, you go to where the trillions are. And so the multilateral development banks are going to be working very closely with you all to be able to tap a lot of those trillions into where we believe they need to go when we talk about sustainable development. The second one is that there's quite a lot of diversity. You know, we've had quite a lot. You have small institutional investors, you have large institutional investors, you have those, like you were saying, that you invest through other asset managers. You have large ones that can actually, they understand better, they have the capacity, they can take on more risk. So one has to understand that differentiation as we try to go forward with regard to that.
Well, there's going to be a little bit of history made here in the next half an hour or so. There's going to be the announcement of the first ever professional basketball league for Africa. And just over my shoulder here is one of the glittering prizes that's been brought here to honor and inspire this occasion, that's also got a bit of history behind it. Now, this is the Larry O'Brien NBA trophy from the United States. And this year, it was won for the first time by the Toronto Raptors, which is the only professional sports outfit in the United States to be run by a black African, a gentleman by the name Masai Ujiri.
We have to be received in a way where sometimes, a lot of times, people, when they come back, they think they are being hunted for money, you know, and I think it could be, it's just a way people compromise together, or whatever your specialty is. I think more expertise can be brought on whatever that person's specialty is, rather than a lot of times focusing on money. There's so many people that have different skill sets, you know, different ways to affect youth, or affect, in my instance or situation, is sports. So many people that want to come and give back, invest in the continent, and I call it investing now because Africa has to win. Yeah, we have to win, and we have to have a vision and see bigger.
I would imagine the margins don't compare to the other more traditional sectors, and therefore how are you attracting them given the margin difference?
Well, I mean, I'll have you know that the fashion and clothing industry is really the new gold. And I think I'm still very excited about it. And why is that? Firstly, if you look at technology and what the new business models that are upcoming through the technological activities like the online retails, that is changing the landscape really drastically and making it more inviting to invest in the sector. But secondly, when we're investing in these other sectors, agriculture, for instance, we know that cotton, which is an important input for the fashion industry, an investment in that area is going to benefit us, the fashion designers and the clothing sector, because that would mean that there's a reduction in the input costs for designers. You know, currently the costs for apparel is just so high because designers do not have readily accessible raw material.
Here we are, we're carrying on with our live interviews here with investors who spent the last 2 days at the conference. And with me here is V. Shankar, the CEO of Gateway Partners. Thank you very much for joining me.
Glad to be here, Chris.
Glad to be here. So you have a fund about $800 million. You've a number of investments in Africa already. What's the feeling you're getting from what you're hearing here from foreign investors at this conference?
Very good vibes. I think generally positive. The Africa narrative is finally getting through. There's clearly a big gap between perception and reality. The reality is much better than the perception. And conferences like this help bridge that communication gap and to help put that Africa story out.
Conrad, thanks once again for your time. I mean, we were talking briefly about the investment forum and about this is the second year, and you were here previously the first year. So what are your impressions on how it has differed and it has improved from the inaugural one?
It certainly has become the go-to conference as far as investment, direct investment is concerned. And as such, it's grown from last year. I'm quite impressed. There are many new ideas that are being put on the table.
Kumi Adesina, the president of the African Development Bank, is standing by to speak more on that NBA deal signed.
Into the trash can. And I can tell you it was the NBA championship game I will never forget. I was glad, that my team won that particular game, but I'm a big fan of the NBA. Let me say a few words about how we can work together. I want to thank Masai for being here last year. And I can tell you, Mr. Commissioner, nobody had ever explained sports to me as a business like Masai did here last year. It talked to us about the need to look at talents in Africa. It talked to us about the need to invest in sports infrastructure in Africa. It talks about the need for us to invest in sports with equity investments. And I think I'm so delighted that you are here, Mr. Commissioner, here today with us. Let me say that the African Development Bank and its partners on this platform, we look forward to working together with you at the NBA as you invest in sports on the continent. Two main ways that we are very committed to doing that with you is first and foremost with regard to sports infrastructure. Masai has gotten President Kagame to invest in, I think, a very large sports facility for basketball in Rwanda. And the president told me that it's a 10,000 person capacity facility and that is filled every time that everybody comes there. And now he says he wished he had done it at 30,000 capacity.
We've seen the tremendous opportunity we had on the continent, not only to grow the sport, but to grow a business. So this is why I'm delighted that today we are talking about sport as a growth engine. Our goal is to develop a robust ecosystem, to grow an industry that is going to create jobs, that is going to build and bring world-class events on the continent. Over the past 4 years, we've played 3 NBA Africa games to sold-out crowds in Johannesburg in 2015 and 2017, and last year at Sun Arena in Pretoria. We have launched our junior NBA programs as a way to offer participation platform to young boys and girls with passion and talent for our game to participate in it. Today, we have 25 leagues in 14 countries. More than 2.5 million youth are exposed to this game. We launched the Junior NBA Global Championship. In the past 2 years, our Africa team have won the title in the international division. We celebrate the Toronto Raptors, we celebrate our brother Masai Ujiri, and I hope to see you in these great African cities to come and watch our games with the inaugural Basketball Africa League season. Thank you again, President Adesina.
The Alicia IDF fund launch. I mean, now this is a fund, it's been announced here as well at the conference. Now this is a fund to help empower women.
Yep.
Exactly, just give us a sketch of exactly what it's going to be.
It's a private equity fund. It's a fund that is managed and owned by 2 women, which is dedicated to financing women SMEs in Southern Africa and Nigeria. The whole idea is that the return and the impact thesis is there. So we were very keen to partner with our colleagues at the African Development Bank to make this fund happen. It's a multi-continent fund where we have ourselves, we have obviously the African Development Bank, we have partners in the rest of Africa as well as the Dutch Good Growth Fund and others which are in Europe.
African Development Bank, and I know you invest in a lot of such things on the continent. Why did you choose this particular fund to
well,
support?
first of all, we actually helped it be created because in fact these are 2 individual portfolio managers, private equity managers that actually we brought together to work together, and they're actually, as was mentioned earlier on, they're actually working on different geographic zones, Southern Africa and Nigeria and maybe 1 or 2 other countries in the Western African zone. Women asset managers, identifying women in businesses, women-owned businesses or women majority business participants that are going to be funded by this fund. And it took them, they were explaining it at the press conference just earlier, how the narrative has evolved over the years for people to realize that this is not about charity, that investing in women is business, and that you can make returns that are very attractive, alongside having a social impact that is quite clear.
One of the big deals everyone's talking about today is waste to energy project. Just tell us a little bit more about it.
That is correct. That's one of the deals that was presented. It made it through to the boardroom sessions, and it's 12 billion of converting waste to energy project. This is for Ekurhuleni and the city of Tshwane. You know that in South Africa we're looking at our energy mix, and making sure that we balance our energy supply for the country. So this is one of those processes towards making sure that we achieve that.
This is going to become big business in the future, isn't it? Because breweries can do it with their waste. You can even do it with household waste, all kinds of waste. Just tell us, what kind of companies can start feeding waste into this, people to make money out of?
It's a lot of solid waste that's being generated. Generally, we have issues with the landfills that are not able to sustain the amount of waste that goes into this. So if you recycle waste and make sure that you convert waste into energy, you also by default extending the lifespans of these landfills.
Just explain to the layman exactly how it all comes together, this financing deal.
Okay, so that we've tested how the municipal finances work with regards to waste and waste management. So that budget that they have is what we're looking to use in order to provide the technology and the treatment solution. So the budget is there, so they've got a line item under waste in any event, for which they're spending on landfill management, gate fees, transfer centers, recycling centers. So we want to make use of that particular budget to find a more holistic solution to what they can provide, to what a developer can provide the city. So we would put that out. So let's say Nokolo has a developer that's familiar with waste-to-energy projects. I would come with a complete finance solution for this particular project. We're solving for something, so you bring me a solution, and then I tailor, the municipalities will tailor this deal around what it is that we can afford. We will pay you what we need to pay you over a concession period.
Financing is very, very critical to achieving the goals of the AFCFTA. First of all, the political act has been done, and we must congratulate all our leaders who finally decided to take Africa's destiny in its hands. The fragmentation caused by years of colonialism have been the cause of the difficulty Africa has been facing, and that is what AFCFTA is finally trying to resolve. However, the political act will not cause the trade to happen. There are very, very difficult things to be done. First, and I think the priority now, is dealing with the adjustment costs. It is dealing with the adjustment costs that will determine how many borders will be open or closed on July 1.
I think as we journey with regards to the vision that is espoused by Agenda 2063, I think we have to have both, the positivity, the enthusiasm, as well as the realism. And the realism is the fact that, and as mentioned before, that there are going to be adjustment costs. I think we need to make those adjustment costs visible so that once they're visible, we can deal with them. And between the private sector and the public sector, we can tackle these and continue our journey forward.
I think, for a start, women were ahead of us, because if you look here in Southern Africa and even across Africa, they are already trading across the borders without the free trade. So what we need to do now is to support them to increase, to scale up their businesses so that now they can trade even more and formally. But we also need to make sure that co-ops are supported, the small businesses are supported, because my brother there talked about the big companies. Yes, the big companies are important, but their suppliers must come from the small ones.
That's correct.
So the suppliers, whether you are talking about a big car manufacturer, but the parts must come from the small business. And the women must be integrated into that.
I just want to put this back in the room, and that is that the free trade agreement connects, at this stage, 54 countries. We hope that Eritrea will come and make it the 55. And we will be looking at a scenario where we have 1.2 billion people today, 1.7 billion people predicted by 2030. And those numbers again, 2.1 trillion in terms of aggregated GDP, somewhere between that $2.1 trillion number and the $3.4 trillion number. But remember, purchasing power parity. From that perspective, we're looking at $6.7 trillion.
We bring capacity to the continent of Africa to develop and operate rail and to set up an integrated mobility system, because railways is really a means to an end. It's about mobility. It's about getting people from A to B. So our partnership with Deutsche Bahn brings 180 years of experience to the continent of Africa around railways and mobility. That's the first part. The second part is the partnership, the memorandum of understanding that we've just signed with Africa Export-Import Bank. Africa Export-Import Bank is one of the leading development finance institutions on the continent, committed to supporting trade on the continent. And as President Orama mentioned, that includes capacity to create productive capacity, one, but two, to deliver to market. So between our capacity to develop and operate railways and mobility systems and their capacity to finance, we think it's an incredibly strong team to not only develop and operate railways, but also to finance those railways.
And we will continue, of course, with the coverage of the Africa Investment Forum, which ends tomorrow, but
tomorrow.
Still a lot more in store.
Yeah, a lot more in store. I was speaking to the CFO of the FDB today. She said she was going to give me more details on that target, if they're going to meet that target, that $67 billion target of investment interest
And
at this year's forum.
let's get it clear, it's $67 billion. Yeah. But Ken, thank you. I think that's a wrap from us. So thank you to the viewers for watching, and see you tomorrow.
All right.